Hey, good morning, guys. Welcome to Market Mondays. I apologize for not doing one last week. Totally forgot, to be honest. We had a whole President's Day on Monday, and then the rest of the week just happened. I'm gonna get right into it and update you guys basically what's happened in the last 2 weeks with mortgage rates and some interesting lawsuits that are coming into place that are going for really big name lenders out there, especially ones that are who are helping veterans. But let's get right into it. I got a dad joke that's I think is pretty good for you guys. A man was found in a vat of pureed falafel. Found in a vat of pureed falafel. The police think, get it? Homicide? All right. So getting right into it. Over the last 2 weeks, mortgage rates haven't really been moving very much. If anything, they've been pretty flat, which is good because they've been flat on the lower end. There's not much that has been changed except for the fact that the unemployment rate has reported that it's gone down from 4.4 to 4.3. Now, this doesn't make any sense because everything that we've seen as far as the jobs report earlier in the previous week leading up to this unemployment rate coming out, that we were expecting the unemployment rate to go up, if not stay the same. For it to go down doesn't make any sense at all. So what was nice is that on the day was that mortgage rates actually got worse, but the next day they bounced back. We believe that all the investors realized that this information is mostly bogus. They really just need to fix how they're weighting this report, how they're really analyzing these numbers, because they're not using actual reports from like the job openings, the continuing claims. They're not really using actual numbers. They're just using numbers based on modeling and not actual data that's being presented, which is really tough in a lot of ways. Another thing that came out this previous week was an inflation report called PCE for December. Now, what's tough with that PCE report was that it also showed inflation wing going up from 2.9 to 3.0. For the most part, not a huge impact, but the Fed's target is to get that number down to 2%. So we have a long way to go to see those numbers improve down that direction. With all the higher numbers pretty much gone, it's gonna take longer and longer, and it's gonna be much harder to get down to that 2% range in this last leg of it. So we'll see how mortgage rates go, but for the most part, what's nice is that they've been very relatively flat over the last 2 weeks. If anything, there was a slight bump, but for the most part, VA rates have been mostly flat, and then conventional rates have been improved a little bit. So we're pretty much, at a relatively nice low since last September. We're pretty much have hit that low of last September in 2024. Sorry, not last year, 2024 September. Now we're going back down to those numbers, which is a really good sign. Now, let's get back into the bulk of what I want to talk about today. So, in at the end of January, there was a class action lawsuit that was put onto Rocket Mortgage, also known who was predecessor of Quicken Loans. And the lawsuit basically states that Rocket Mortgage exploited the vulnerability of home buyers for profit by steering customers to make them use Rocket Mortgage's financing through pressuring of real estate agents. So, in a nutshell, real estate agents can actually sign up to Rocket Mortgage and get kind of a kickback, or get a kickback to Rocket Mortgage by getting leads. And it sounds like what Rocket Mortgage was doing was pressuring real estate agents to use Rocket Mortgage for their financing, even though that financing may not be advantageous to the borrower, so that they're just basically making sure the client uses Rocket Mortgage in trade of leads. So I think there's a two-party situation here that, what's tough is that they can't blame one single real estate agent or real estate company, but for Rocket Mortgage to provide so much pressure against real estate agents, this is a lawsuit that's happening against them. So it goes on to talk about, the alleged scheme compels real estate agents to pressure to use Rocket Mortgage Company. So pressure clients, sorry, in exchange for, again, leads. And agents were required to pay a 35% referral fee when the home closes. It's going to be a very similar story to the next lawsuit I'm about to share with you guys. And it goes into more of the story about what's going on, how much money they made. But yeah, the Rocket Mortgages and its predecessor, Quicken Loans, offered substandard loan packages. and there was a def and the defense were engaged, Rocket Mortgage, were engaged in a perpetual loop of illegal referrals and kickbacks through Rocket Homes and Rocket Mortgage. Keep in mind, Rocket Mortgage was acquired by Redfin. So it's something to consider when if you are a Redfin agent or you are working with Redfin, this is something to consider. But steering home buyers through a process that left them paying higher prices on bad loans. So that's basically the skinny of this entire lawsuit. I haven't seen an update from it yet, but this is kind of what's interesting about this big lender that states that they're, the best and they're cheapest, whatever it is. But this is an example of how if you know, what's the affiliation? Question is, what's the affiliation with Rocket Mortgage and your agent? So, for example, defendants include Rocket Companies Incorporated, which owns equity interests and co-defendants of Rocket Mortgage, Amrock Holding, and Rocket Homes Real Estate. So that's something to consider when you're as a client who you're working with. If they're not required to make you use whoever you use. You have every choice in the matter to use whoever you want. So if you receive there's a difference between a strong recommendation because from your real estate agent, there's a strong recommendation, but there's a difference between pressuring you. So I'd say a strong recommendation is like, hey, look, I don't think this is the right fit for you, blah blah blah. But ultimately, it's who you want to use and feel comfortable with using. This is why I don't recommend using them. And then pressuring is like you need to use them. You have to use them, so on and so forth. So using those kinds of languages is going to be very pivotal in making sure you don't get in trouble. So the next entity that's just filed a lawsuit just this month is Veterans United. So Veterans United, kind of a similar story where vets have been harmed by steering practices, leading them away from cheaper mortgages. So what's happening, it sounds like, is that there's a couple of layers to this. So it's saying in here in this article that Veterans United, also owned by Mortgage Research Center, and Veterans Realty, which is owned by Realty Search Solutions, which is kind of funny. They're basically the same name, but one's for mortgage and one's for realty. But basically, it's accused of by deceptively suggesting that the Veterans United is part of the VA, and or it is also sponsored or it basically, you know, uh, endorsed by the Veteran Department of Veteran Affairs, and because of that, they're also able to steer clients from more costly and higher loans, which they maybe what I'm thinking they're doing is probably they're steering clients away from the VA loan, or they're charging a whole lot of fees on VA loans, which could be another issue. But there's also another similar situation with Veterans United as Rocket Mortgage is it has to do with the partnership they have with real estate agents that have to do with a kickback. So there's a lot of they right now the lawsuit is that they believe that Veterans United, has blatantly engaged in illegal practice that have harmed homebuyers through predatory loans and basically making veterans think that the Veterans United is part of Department of VA. Again, Department of Veteran Affairs cannot endorse, sponsor any kind of veteran. They write the home loan program, but it's up to the banks and lenders to do the loans for them. So they can't recommend or suggest or refer anybody to any type of loan program or loan lender. So that's what's unfortunate. There's another company that got in trouble about this about a couple years ago. I think it was Federal Savings Bank. Basically, they made all their advertising and their marketing look like it's from the Department of Veteran Affairs. In a sense, they almost used a very similar seal as the Department of Veteran Affairs to think it was from the Department of Veteran Affairs, which in fact is they're just just the another lending company. So, Veterans United and others have no affiliation with the government. It is founded by, and Veterans United is ran by three individuals with no military service record. I'm not too concerned about that necessarily. When it comes to running a business, it's just whoever's, competent, if veteran or not. But what I do want to say is that the website is designed to mislead home buyers, and also thinking it's the number one VA lender, which is, that's a big, bold claim to say, depending on what you're looking into. Also, it talks about multiple real estate and loan officers who are routinely lose business to Veterans United because there's a lot of veteran and military customers think they have to use Veterans United because it's affiliated with the VA. So again, there's a number of other websites out there that also look like they're part of the Department of Veteran Affairs. And if you look at the fine print, it's actually a lender or a lending team that created a web page that looks like it's endorsed by the VA. So unless it's a veteran, again, the veteran Department of Veteran Affairs does not have a lending um, division. It doesn't do loans or anything like that. It does Native American loans, but that's a totally different story. Um, when it comes to normal loans, they don't have a lending division. So that's the one piece a lot of people don't understand, and what's confusing about the advertising that these companies are giving out is that they think that these companies are part of the Department of Veteran Affairs. So there's blatant steering, which is very similar to the whole Rocket Mortgage lawsuit, violation of RESPA because of the whole kickback. So this is where it talks about Veterans United has a network of affiliated agents throughout the country who do not work for Veterans United, but who receive referrals from Veterans United. And if the lead closing on the house agent pays about a 35% commission, which sounds also very similar to what Rocket Mortgage is also pressuring on their agents. So, but basically, the practice of providing leads and agents for pushing clients, pushing, keyword is pushing and pressuring to Veterans United is blamed home steering. So, I think that's what's tough about the situation that a lot of agents are in the last couple of years. That's hard. It's been hard for the business. So and an extra and some of these agents' business, a lot of it comes from Veterans United. So and or at least their leads do. I haven't heard a lot of great things about Veterans United. I've had to save a couple of their loans, but this is kind of who you're kind of dealing with. It's kind of funny over the last 3 or 4 years. We've seen another company like Federal Savings Bank, and a couple other lenders that got in trouble with churning. And churning has to do with refinancing a client too much and too soon. And just getting them a slightly better loan when it's not really a slightly better loan. So keep an eye out if you're someone that's, considering being working with in terms as a real estate professional or as a client. Be careful what you're getting yourself into. This is very new stuff as far as the lawsuits come. So there you go. I really recommend, looking, regardless of what advertising says, check out what's going on out there when it comes to who you're working with. It's if you're as a real estate professional, I mean, it's if you're getting leads, I get it. That's tough. There's this program that seems legit. You sign up, and there's a lot of other lenders that do this as well. But I think the key thing is making sure your clients understand that they have just because this lead came from this type of lender and they're asking for commission. Keyword, if you're paying commission to get these leads, you're paying to get leads. That's kind of you want to be very careful with how you present that information to them. And I understand that getting leads is important. We got to find ways to grow our business, but if it puts the client at a detriment, yeah, it might actually hurt your business down the line. So that's all I'll say about that. But yeah, these are articles that you guys can look up in regards to just type of Veterans United lawsuit or Rocket Mortgage lawsuit. You can kind of see it. But the key thing is that, Veterans United is owned by Mortgage Research Solutions. So uh, that's kind of a big catch 22 in regards to who's running the situation. But otherwise, that's about all I got for you guys today. Just again, take a look, read it for yourself, interpret your own way. Um, find you could if you are someone that's prefers not to work with Veterans United and you're trying to like talk to your clients about their other solutions or other opportunities. These are things that you can potentially show them to make sure your clients are at least informed about who they're working with. Otherwise, that's all I got for you guys. Nuke out.